This week, silver gave us one of those significant moments. It broke above $58 an ounce, a new record driven by shrinking inventories, steady demand, and a physical supply chain that's showing some real strain. Now, even with a move like that, some voices like Clem Chambers, the CEO of Online Blockchain PLC, say this is not the full story. In fact, he called the recent spike noise, insisting the real move hasn't even begun. His words, not mine. But they do set the stage for a much bigger conversation about what's happening in the world of physical silver. Before we dig into all that, let me pause just for a moment. If you've been curious about how physical gold and silver fit into a long-term plan, Goldco has a free gold and silver kit that breaks everything down in plain English. It's a simple, friendly resource, something you can read over a cup of coffee, and if you want it, you can get it at no cost. Just dial the number on the screen or click the link in the description. All right. Back to silver's big moment. What pushed prices to this new high wasn't just excitement. The numbers show real, measurable tightness across the supply chain. The Shanghai Futures Exchange is sitting on its lowest inventories in nearly a decade. China sent roughly 660 metric tons of silver to London in October, an unusually large shipment that helped relieve pressure after a surge in delivery requests at the LBMA. And here in the U.S., December delivery requests on COMEX have been elevated as well. Now, analysts are careful to point out that delivery notices don't always translate cleanly to immediate inventory stress. The relationship shifts quickly, and the available data doesn't give a perfect picture in real time. But Chambers sees these signs and interprets them as a market that could tighten fast if even a fraction of those contracts asked for physical metal. And that's what this entire moment is really about. Physical silver, not the kind represented by a ticker symbol, a contract, or a paper proxy. Silver-backed ETFs may track price movements, and they certainly saw renewed inflows heading into the final quarter of the year, but they are not the same as holding the physical metal in your hands. The article makes it clear that coin and bar demand has grown, mints are reporting higher sales, and several Asian dealers are dealing with multi-week delivery delays. That's happening in the real world, not on a screen. That's not the full picture. Industrial demand is still strong. Solar manufacturing, electronics, green energy tech, all of that continues to pull on supply, and global mine output has not been racing to keep up. Some producers have actually reported declines year over year. Recycling, stable even with higher prices. Put all that together, and analysts describe the situation as a potential supply imbalance. Not something you can measure perfectly day by day, but a scenario where limited supply and steady demand create the kind of environment that shocks markets from time to time. Now, Chambers believes that combination, tight supply and strong interest from everyday buyers, is shaping the next chapter. He even went so far as to say retail demand is the juggernaut behind the move. And whether or not you agree with his phrasing, the underlying fact is simple. Physical silver is leaving shelves, and it's not leaving slowly. Now, while silver grabbed headlines, it wasn't the only market the article explored. Chambers talked about copper's growing role in electrification and AI infrastructure. He highlighted platinum's sensitivity to supply disruptions given its reliance on output from South Africa and Russia. And he touched on softness in the crypto space, where Bitcoin recently slipped below $86,000 after he said he exited at $100,000 during a prior Kitco appearance. Whether one aligns with his take or not, it all ties back to a broader divide he sees forming. Assets supported by physical scarcity and assets more exposed to liquidity shifts. But what brings us back again and again is silver. The article closes with Chambers' view that this is not the start of a larger reprice, not a prediction, but his interpretation of the trends that he's watching. Now let's take a breath here, because whether we hear about headlines, tight inventories, or big voices sharing bold opinions, it's good to zoom out. Physical gold and silver have been around for a long time, long before screens and tickers. People have used them for generations as a way to steady their long-term approach, not to chase headlines, but to stay grounded through them. And if you've been thinking about adding something tangible, a portion of real metal, to your overall strategy, Goldco makes the process feel a whole lot simpler than the world sometimes makes it seem. In fact, when folks open a qualifying account, they may also be eligible for up to 10% in bonus silver or even a free Ronald Reagan half-ounce silver coin. It's a nice little thank you, and it tends to get people smiling. So hey, just dial the number on the screen or click the link in the description. So silver may have broken a record and experts may have plenty to say about what could come next. But what matters most is understanding the fundamentals, real demand, real supply, and real metal. Headlines come and go. Physical gold and silver, well, they've stood the test of time. If you want that free gold and silver kit, or you're curious about how physical metals fit into a long-term plan, well, the door's open. And if you're just here for the story of silver's big week, well, it's certainly been one for the history books. Either way, I'm glad you're here because staying informed is always the smartest first step.